Good afternoon. It's great to be together again on the Silicon Slopes PropTech chapter discussion. My name is Matt Knight. I'm the director of the PropTech chapter, and we'd like to excuse our co-director Ross Rudd today, but we're excited to have on the panel a local venture group, RET Ventures out of Park City, and we're excited to hear from them and learn what their platform's about and the things they're investing in, and we'll get to them shortly. I'd first like to turn a minute over to Eric Smith, Senior Vice President at CBRE, who of course is our chapter sponsor, and we appreciate CBRE. Eric?
Thank you. We're happy to be here and happy to be a sponsor with Silicon Slopes. It's a great organization, and it's great to be able to collaborate and work with all the different members and people that are affiliated with this great group. I appreciate the opportunity to be here and to get to know more about this venture capital group and what they're working with. And we have a lot of good venture capital groups in the Silicon Slopes area that help a lot of the tech companies with different types of funding and growth. Get to work with a lot of companies myself that are looking for that growth in office space after they work with those companies on their funding. So it's great to be here. Appreciate the opportunity and look forward to learning more about the different things that are going on in the tech community today.
Thanks, Eric. Appreciate it. Well, let's get started. RET Ventures. We've got Jameson Hartman and Sam Kroll. How are you today?
Doing pretty well. Made the drive from Park City.
Yeah, really happy to be here, and appreciate Silicon Slopes and you, Matt, and CBRE team as well for having us.
I appreciate it. Thanks for making the trek down the mountain. It's a snowy day here in Utah, and Jameson's going to take advantage of some skiing or snowboarding later, I hope.
Yep, I almost called in sick today, so luckily I'm here, but soon enough.
Great. Well, tell us just, I guess to kick things off, for those that don't know about RET, tell us kind of your value proposition, where your niche is in the investment world and with technology and with real estate, and maybe a little bit of background about RET, how it got started, and why Park City, why Utah, and kind of a little bit about your team.
Sure. Happy to start and let you follow up, Jameson. So RET, I'm sure many folks have figured out, given the context of the conversation, is a very clever acronym. Stands for Real Estate Technology Ventures. And that's basically all we do, is invest in early stage technology startups serving the real estate ecosystem. What we're referring to today is PropTech. Even more specifically within real estate, our specific angle on the world is working with strategic owners and operators, largely in the multifamily and single-family rental industries, to sort of execute and invest on their behalf and try to find solutions that are both great investments, but almost more importantly, can deliver real value to the industry and create a whole greater than the sum of the parts for our investors and limited partners as well.
Some people say we're the outsourced research and development arm for these large owner-operators in the space, right? If they're looking to a specific category that they're wanting to explore from technology investment in terms of their own properties, say, a maintenance tech solution, we assess the field, we come back to them. Hopefully we can, bring them a solution that we can also invest in. Also a fun fact that I quote sometimes is that I think about 1 to 2 out of every 10 institutional apartments in the US are within our network. So if you're living in an institutional apartment, there's a high chance it could be one of our LPs in our fund.
Very interesting. Yeah, RET seems to be primarily focused in multifamily, correct? And are there any other subsets of real estate that you guys are looking at or considering to venture into, or is multifamily the primary vertical for you?
Yeah, I think we try to be strategic in everything we do, and so the answer to that question really comes as a function of who our investors are and what they need. So we started really in this core of multifamily operations, optimizing the property management environment for largely these vertically integrated REITs and other owner operators. We've taken that as an expansion within the residential world into this world of institutionally owned single family rental, which is this huge emergent growth asset class in the market. And really there are no dedicated or haven't historically been dedicated technology solutions for that asset class. And so we've been super focused on the single family rental application in recent years. And as innovation keeps happening on the asset side, we'll follow that on the technology side as well.
Yeah, it's also not siloed. A lot of technologies that are broader PropTech apply to multifamily, apply to office, apply to industrial. So for the most part, we'll look at solutions and we'll say, great, we can help you, the technology partner, with your hook into multifamily, but it doesn't necessarily mean that multifamily is your only end market. I know Sam, invested in a company called Marker, and Marker has broader applicability rather than just to multifamily. It can be a solution for all asset classes in real estate.
It's truly amazing, those that are involved with real estate and have a passion for technology, and to see what's out there on the landscape, not only for multifamily, but other asset classes. I have some familiarity with multifamily, and it's amazing to see what is out there as far as from a management experience, and also at the renter or the tenant experience, right? What they experience going through their building and the access they have. And so it's fascinating to have those technologies coming for real estate.
Yeah, absolutely. And I think just to follow up on that point, one of the things that folks always ask venture investors is, do you do consumer, do you do enterprise, B2B, B2C, all these acronyms? It's alphabet soup at the end of the day. To use another acronym though, the cool thing about multifamily technology investment is every technology, or almost every technology by necessity, is B2B2C. There are multiple stakeholders and multiple buyers whose value proposition you need to meet. And so it sort of satisfies both from an interest and sort of thesis building perspective. It's a lot more interesting, but it makes you think critically about all those stakeholders and really how many different stakeholders go into making a multifamily property run effectively.
Yeah. The other side of it too, I think with multifamily, and you see it in most asset classes, but it's tough to have a mom and pop, office owner. It's more likely that you'll see mom and pop multifamily owners, they own 100, 300 units, all the way up to the large REITs that own, 50,000 to 100,000 units. And so it is interesting seeing kind of the trend of technology investment across those groups, and one solution that applies to the mom and pop, one solution that applies to the enterprise. And we have to think about that when we're assessing potential investments. Are you only for these large scale institutions, or are you only for the mom and pop? Do you have to be, everything for them, the out of the box perfect tech partner? So it's interesting thinking through it that way.
Now, I want to read this because I just want to make sure I get it right. We recently saw that RET is investing in more ESG, dedicated funds, focused funds. ESG standing for environmental, social, and governance.
Governance, yep.
Tell us about that. What does that involve, and why go that direction? I'm just curious what your thinking in-house was for that.
Yeah, that's the trendy topic of, I think, 2022 and 2021 is the ESG. I think the big impetus for it is that we have a cohort of 45 investors plus or minus, these large institutions, and they kind of read the tea leaves, saw that, hey, there's a big push for sustainability, there's a big push for reporting, there's a big push for just kind of social awareness, and thought, hey, what technologies can help us address this? And so I think in 2021 we started a working group to try and assess technologies a little better through the ESG lens, and out of that kind of said, look, there's a lot of potential investments that apply to ESG specifically, right? It doesn't mean they're just ESG. It means that they can kind of check that box and check core value add to the owner operator outside of ESG. And so the thought was, well, does it make sense to bring together a dedicated pool of capital to pursue these potential investments? Do they have a different investment profile, et cetera? So it was a big push just from our partners, and we've seen there's a lot of companies that are popping up that apply to the space. Candidly, I think for the most part, real estate specifically, there's the sustainability side of it, right? It's the largest asset class, has a big environmental footprint. Climate change is an issue, and so there's a lot of solutions that are addressing that specifically. I think one that we actually invested in, or Sam led, was Passive Logic, local company. There's a big potential ESG factor to Passive Logic, right? That's not their only value add, but it has ancillary effects and can be very meaningful for owner-operators that deploy their technology.
Yeah, and I think just to follow that up, I mean, what we're starting to see is, to Jameson's point, ESG has been this emerging theme, figuring out what the focus is and is it sort of reactive or proactive. And I think the tangible value that can come from implementing some of these sustainability, energy management, another that Jameson led the investment in, a business called Parity, that is around energy conservation, but really in the lens of reducing overall cost. I mean, if you look at a property P&L, areas such as energy and utilities alongside taxes and insurance are the biggest line items, right? And so if you can manage and rein in those costs through application technology, it ends up being very meaningful as well.
I'm glad you brought up Passive Logic, a local company, a PropTech company that RET's invested in. How are they doing? Is there some things you can share? We had their team here and talked to their CEO and had a great discussion. Fascinating platform in terms of managing assets and seeing their performance. Have they been great to work with and performing?
Yeah, absolutely.
Without sharing too much.
Absolutely. No, the Passive Logic team is fantastic, although every time I see them, they make me feel stupid. But nonetheless, it's a really exciting company. I think, if you take a look at their job board, they are hiring gangbusters and things are going really well. Recently announced some pivotal investments from large, critical stakeholders in the industry, both Brookfield and more recently NVIDIA. So I think there will be similarly some really exciting announcements to come in the new year. And I think sky's the limit for Passive Logic. And I think they also stand as a really exciting sort of example of a technology leader in the Utah community as well.
Are there any others that you can share that you're considering investing in here locally in this Silicon Slopes community? Is there any other PropTech groups that you have an eye on or care to mention? Any interesting platforms that you've come across here locally?
For sure. I mean, I think there's always exciting innovation coming out of the Utah community, clearly. Even looking back in PropTech, right, Entrada came out of the community here, and the list of really exciting technology companies that have come out of the Utah community are great. Another that I would mention that we actually are no longer invested in because we had a successful exit of the business was a company called Slingshot, run by a phenomenal local entrepreneur named Taylor Olson, who has been a joy to work with, and we continue to work with him on other initiatives that he's working on. So maybe some exciting things to come from that perspective. But we always keep our ear to the ground and are looking for new opportunities. So if you have a PropTech startup in Utah, shoot us a note. But to answer your question, that's sort of the sum of it at the moment.
Yeah, I think from our perspective too, it's we are a specific stage within the ecosystem of PropTech, right? We focus on Series A. Very strategic focused, do you have a multifamily angle? And so sometimes we'll come across companies that are a little too early or a little too late, and we'll say, hey, great, you're a perfect company. We can't invest in you, but let us help, partner with you and help you sell to the multifamily community. I've made many recommendations about technologies where I'd say, hey, if it was 2 years ago, we would have loved to invest it, but they're just too late stage for us, and we have an investment profile that we need to meet. And I know there's several in Utah that can fit into that fold.
Yeah, for the entrepreneurs out there watching this, that are interested in PropTech and are focused in that vein, that's good to know that RET is kind of focused in their specific areas. But you could definitely give them a referral to others that might provide capital and strategic direction. So it's a great resource. So let me ask you this: just as we look ahead to, I can't believe it's 2023. Anything you can share with us as far as what your team's looking at for the new year? And in terms of, I just read this the other day, I can't believe that there's over $30 billion invested in PropTech, at least for 2021. I don't know if you guys have the latest numbers for this year, 22, but is there anything that's translating from this year to next year that you're really excited about in terms of investment dollars and excitement around PropTech?
I can go first, I guess, on this. I think this is a little bit of a plug from one of our companies that we just invested in, and plug is the perfect term because the company's name is Plugzio. And so I know a big trend for 2022 was EV charging, especially for the broader kind of PropTech industry, right? Hey, EV adoption, it's growing. There's more and more consumers buying EVs. Can they charge their cars? Where are they going to charge their cars, et cetera? And multifamily has kind of been historically this desert, if you will, for charging, because it's tough to understand, the incentives. Hey, does the owner pay for the upfront charger? How do they charge the resident? How many chargers? How do they get the infrastructure? It's very complicated. It's a lot more complicated than I think other asset classes. And there's been this big push that we've seen in EV charging companies, and we just invested in a startup, Plugzio, that is specifically for multifamily, and we think has a unique strategy. So I think for 2023, I'm excited to see kind of where that goes, because I think it's in an inflection point for the industry. How much adoption do they get? Does their thesis really hit home with multifamily? I think a corollary could be to IoT and smart home. We made an investment in Smart Rent back in 2017, is that correct? And that was kind of the inflection point for apartments need to have smart thermostats, smart locks, ubiquitous Wi-Fi. That was a big inflection, and I see the same for EV charging personally. I don't know, Sam, if you have others.
No, 100%. I mean, I think my answer is a bit broader, but along the same lines. We've all benefited, and certainly the real estate market has benefited in recent years from up and to the right rent growth, relatively low delinquencies, just generally on the revenue side of the P&L. Fundamentals have been so strong that operating efficiency and making sure that your cost side is totally optimized has been harder, or rather less of a focus. And so I think one of the opportunities that I'm looking at as a technology investor going into this new market environment that we're in, at least for the next little bit here, is thinking about delivering really tangible ROI generating technologies, because I think ultimately our strategic footprint enables us to really know where that cost management opportunity can lie. And I think the confluence of that, some of the labor force dynamics that have happened within property management, specifically multifamily, open up really exciting and interesting opportunities around automation. Another company that we recently invested in called Traftis is doing some really exciting things around property management function, automation, and sort of resident engagement in a fully sort of autonomous AI context. So it's pretty cool.
Yeah, I think a trend that applies to kind of what Sam was saying, what I'm saying, I think is broadly PropTech, is this concept of centralization. Is, hey, you own a lot of properties. Back in the day, there was a more fragmented bottoms-up approach. This property partnered with this technology. This property deployed this technology. It was managed locally. And now you're seeing technology that enables these owner-operators centrally, manage all of their properties across their entire footprint and cut costs like an exceptional amount, right? You can have a single BI team that's analyzing all of their data. You can have a single leasing team using automation, using a Travis, using a CRM, and really get leverage on kind of that human capital that back in the day wasn't possible.
How critical is that for business operations? Even if you're a mom and pop shop and have a small portfolio, right? How do you get a grasp on costs and expenditures and so forth? But then you go all the way up to institutional REIT size. I mean, it's exciting what these technologies can do in terms of management alone. Right?
Totally, and I think also in terms of resident experience. I mean, I think one of the really important narrative changes that's come as a result of the really tight labor market that existed over the last 18 months is filling site staff roles, maintenance roles, leasing office roles within the property management context got a lot harder. And so in fact, it's no longer just about cutting costs by automating, using automation to eliminate headcount, and saying, if I can't fill these roles, how do I make sure my residents are still getting the same quality of experience, the same quality of engagement when they come look at our property, making the decision how they're transacting with our property. These automation tools become critical for delivering the expected value for the resident.
As I asked that earlier question, what we're looking forward to the next year, it's all on our minds. One thing we can't avoid is we had some interest rate hikes as soon as yesterday, right? We had a little blip. And so I'm curious how that might be affecting your outlook in terms of the companies you're working with, and if that affects planning going forward at all.
Yeah, absolutely. I mean, it's, our market is the same as any other market, and so far as at the end of the day, risk-free rates and general market risk appetite have an impact on transactions and where they get done and the valuations at which they get done. So certainly that creates opportunities for us in the market. Certainly, it's been a very frothy venture market in recent years. I think we've all read about some of the big name companies that have raised tremendous amounts of money at high valuations, and sort of the shakeout for those is going to be interesting over the next few months. Luckily, we invest at the earlier stage where there's a bit less of an association with the broader market, but we have generally seen prices come down. I think we feel very good about where our portfolio sits because we're sort of addressing the strategic need, and so we make sure that there's really good product market fit before we make an investment. Yeah. I think as an investor, we see great opportunities coming in the market. Certainly, there will also be new technology needs as a function of this. I mean, interest rates and the cost of capital are critical to the real estate business. I mean, it's fundamental. You cannot do it without managing debt appropriately, right? And so applying technology to that construct and saying, managing debt, managing my interest rate risk, these are rule-based systems. Can we create formulaic automation that allows me to manage this smarter and thus manage my business and do better?
I guess, yeah, and my take kind of on the broader kind of ecosystem would be, especially from like a vendor technology partner perspective, would just be as mission critical as you possibly can be. It's tough. It's easy saying that, but if you are, a core piece of the infrastructure and you're not, a potential transactional component, right? Oh, we need you every now and again. You're reoccurring, if you will. I think that, enables you in this environment to be kind of steady and show, consistent revenue growth and not necessarily have all these headwinds that other companies might be having at the time, right? I think, it's, to your point, there's this huge push into a lot of the mortgage brokerage technologies kind of early 2020, 2021 because of easy money, right? People were buying homes, people were transacting, people were moving, remote work was a big thing, and now you can see that those trends might be more reoccurring versus an actual, steady state environment. So if you are a partner or if you're investing, like my view would be, yeah, kind of take a look at how mission critical it is and how consistent kind of that revenue can look like.
I want to kind of shift gears as we kind of get close to wrapping up, and then we'll take some questions from the audience. So be thinking if there's anything you'd like to ask Sam or Jameson. We're here in the heart of Silicon Slopes in Lehigh, Utah, and we're excited about the community. We're excited about the tech initiatives that are here. Give us a sense of how you guys are feeling about the local economy here for PropTech. Is there things that you would share with the community and on this panel to encourage folks to go into PropTech, to encourage folks to consider starting a PropTech-oriented startup? Give a couple pointers, if you would, on those that may be listening that are interested in this space, and encourage them and share a couple sage pieces of advice, maybe.
I can go first. I think probably kind of how I think about it, especially for the local. Also, I'm born and raised in Utah, so I'm a little biased in form of thinking my local Utah entrepreneurs are a leg up over others. But I think one thing that I would think about is especially the broader institutionalization of asset classes. I think we're seeing that in PropTech. You kind of saw it with single family, institutional SFR, but you're seeing it more and more with storage, industrial, whatever it might be, right? There's a lot of asset classes that are popping up and becoming more institutional. And as they become more institutional, there's a mission critical nature to their technology. And so I think for local startups that are thinking about, hey, I'm interested in PropTech, maybe it's, hey, where is the next, quote, institutional asset class where there's a gap in the market, right? There's self-storage, I think. Is it self-storage? There's a specific self-storage operator that's local.
Extra Space.
Extra Space, perfect. And so you can see, hey, look, Extra Space is local. You could build a relationship there. And there's a lot of mom and pop self-storage owner operators that do not have a tech stack that can work for them. Personal anecdote, we live in Park City, and I went and got a self-storage unit, and they said, hey, you still have to mail your check. And we actually just started enlisting software to take emails. So like previously you had to go into their shop to ask them a question and stuff, and it's a pretty low tech environment today. So that would be one area.
Yeah, just to second that point around institutionalization and echo, I mean, some of the largest institutional owners in the country are based here. I mean, Bridge Investment Group is an example. And I think often when I speak to college students, business, MBAs that are interested in getting into the prop tech world. I think a lot of folks jump to thinking of real estate and prop tech as single family homes, single family brokerage, things of that nature. And so I think opening up the aperture, thinking about the commercial world, the institutional multifamily world, industrial storage, et cetera, and that opens up such a massive market in terms of spend and need to operationalize, to Jameson's point. I think I would definitely encourage folks to focus on that institutional and commercial world, maybe over a more volatile, if objectively larger market in single family.
That's what's so fascinating about real estate. It's been a lagging industry, can I say that, with the adoption of technology. And so here you are on the forefront of this, and I bet it's so exciting every day going to work and networking with the people you do and talking with the entrepreneur community and figuring these problems out and solutions for them. So
yeah, I was going to say one point to that, just lagging industry. I've just been noticing most of our partners, are hiring these chief innovation officers, right? It's like that. If you would have probably been 5 years ago and said you're the chief innovation officer at a real estate company, like what does that mean? And so you can tell like immediately, like, hey, technology is important, and investing in it is a focal point right now.
Absolutely. Well, I'd like to thank Sam and Jameson for their time today. They're very generous to come down and visit with us, and I hope the audience and everyone that listens to this gained something. I know I sure did. I'd like just to open up for any questions, anyone in the audience quickly, if there's anything that they'd like to ask the panel here.
There's also Cafe Rio, so we won't blame you guys if you just want to start eating.
Well, if there's not any questions, would like to, please.
Sure.
Why don't we repeat the question too, just so, questions about capital and people's interest in it and in the capital markets right now and willingness to invest. Right. Thank you.
Yeah, we work, as Jameson said, with about 45 institutional owners and operators of all different types of capital sources, right, from public REITs, institutional asset managers, privately held family businesses, sort of everything in between. I think, to your point, the environment for securing debt and funding from that side of the house has gotten a lot tighter recently, and I think that has certainly changed the buying appetites of some folks that are further out the risk spectrum, further out the leverage spectrum, opportunistic funds, a lot of the hedge fund capital that's been chasing opportunities around single family rental and other areas have pulled back a little bit. But I think ultimately the REITs are and some of the larger institutional owners are in a position of strength just by virtue of having a lower cost of capital. And every impression that we've gotten is that they're excited about the opportunities that are emerging in the market as a result of pricing dislocation and changes in the capital markets.
I'm also just personally saying, at the asset level, I think technologies that can show a clear ROI or payback period on the investment. If you could just do the math and say, hey, here's my cost of capital. If I deploy this technology, it saves me, 20%. Okay, great. The project economics make sense. So I can move forward with that. Versus, I think more at the enterprise level, deploying a new technology where it's a little tougher to calculate and understand that ROI, that is maybe where there might be some pullback, if that makes sense.
Can you Jameson, go a little bit farther on your comment on enterprise?
You mean focus more at the enterprise level?
Well, yeah, you said that it's often more difficult to calculate ROI at the enterprise level, but that surprises me. An enterprise software company, from our perspective, it's actually a little bit easier to calculate and understand ROI at scale.
Yeah.
Can you clarify your comment on that?
Yeah, and maybe there's some conflation there in terms of when I say at the asset level, it's more of a technology that you can deploy at the asset level. It could be applied at the enterprise, right? You could say, hey, I have this technology, I can deploy it here, 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 and here, but I can calculate it at its pure unit economics at the asset level. Versus if I just said, hey, here's a software that is a BI tool, help you identify and understand, where you should be spending your time or how you should be adjusting operations. That's a little bit tougher, I think, for people to grasp and say, do I trust these numbers, if that makes sense.
Okay.
Yeah, I think to Jameson's point, it's really, I think his comment was really about if you sit at the property P&L level, then the amount of cost that you're taking out of each property is very clear. Whereas, if you're a corporate and the research team is using your solution, it might generate better research, but turning that into tangible dollars is a bit harder on a calculated level.
Please.
Well, it seems like there are two shifts occurring in the market right now. One shift towards innovation and assisted living, and then there's the whole shift in infrastructure coming from repatriation of productive capacity. What is your guys' opinion on how that relates to a rough estimate on the volume of potential investment, even though the interest rates are going up?
Happy to take a stab. It's been a while since I've been in macro class, so bear with me. But I think, the second point is probably the more important one, and you've seen it start to take hold insofar as industrial and logistics asset classes being by far the lowest cap rate and sort of highest demand asset class in the current market, right? And I think that shows that both from a fulfillment and supply chain management perspective, but also to the productive capacity point, the fact that warehouse space and industrial space is not only in critical demand, but actually an area of focus in terms of how technology can be applied from a blank shell of a warehouse to make a more productive, more efficient, more automated manufacturing environment, fulfillment environment, et cetera. So from that perspective, I think sky's the limit on opportunity, and the interest rate environment certainly is gonna tamp down on some near-term investment in that asset class. But from a secular perspective, yeah, I think the tailwind is there.
Yeah, 100% agree.
Great questions. Well, we'd like to close here and thank both Jameson and Sam for coming and spending some time with us on the PropTech panel. If you have any questions for them, look them up. Is it ret.vc is your domain, ret.vc. If you have questions, they've got a great website there, and you can see their investments and their platform there. So thank you both for coming today. Appreciate the time.
Appreciate it, Matt. Thank you for having us.
Thanks, Matt.
Thanks to CBRE for sponsoring again, and this will be our last discussion panel for the year, but we'll look forward to a quarterly cadence next year, and we'll see you next year after the new year. Thank you.